and welcome to Victor Song's Real Estate Podcast. In each episode, we connect with experienced industry experts, investors, and homeowners to share their best tips for success. Today, I'm speaking with Ben Cheung, an award winning mortgage broker with DLC Clear Trust Mortgages. He lives in Richmond, BC. Welcome, Ben.
Thanks, Victor, for the warm welcome. Um, just wanted to kind of give you a rundown of who I am in a very quick summary, I guess. But yeah, so my name is Ben, and I've been a mortgage broker for around 10 years. Prior to that, I was a banker,
Mhm,
working for HSBC and moving on to TD Bank, where I took on various roles. Mostly on the retail account management side,
mhm,
sales manager and small business commercial banker. So my experience is quite wide.
mhm,
And, you know, how I became a mortgage broker was basically, hone my skills on lending because as a banker, you do both lending and investing. And I just found my passion in helping and assisting people through, trying to help them
mhm.
achieve their dreams and obtaining and financing a home.
Right.
So
Yeah.
that's where my focus is.
Mhm.
Yeah.
Good. You're very successful team, right? You guys established. You guys do a lot of deals every year.
Yeah. I mean, when I first came out, I have my partner, Vuli, as well as Kurt Lee on the team. And, switching from a 9 to 5, like sales salary and bonus job, very
Hmm.
cushy to full commission
Hmm.
took, I was quite scared. Right.
Yeah.
And basically, 10 years back now that I look back at it, I should have done it earlier.
Hmm.
Because if it's something that you do enjoy, and I truly do enjoy doing it, I enjoy talking to people, I enjoy helping people. And, you know, I think that in the grand scheme of things, I made the right choice.
Hmm.
And I don't look at people as like a deal. I look at it as more like how many people can I help?
Hmm.
Doing the proper things and everything else kind of follows.
You've helped so many of my clients, and it's
Thank you.
there's a lot of deals where we're like, oh my god, this is challenging. The timeline is really tight. The amount that they can borrow is limited, and you always come in and save the day. And so I want to say thank you for all the help, and you've you've made a huge difference to a lot of my clients.
I mean, likewise, I mean, thank you, I should say, right, for supporting me. Um, Unfortunately, I am in my industry known as the guy that comes in almost last minute sometimes to
Hmm.
save a deal.
Hmm. Hmm.
Um, and it comes in wide ranges from
Yeah.
inexperienced bankers to, so people just submitting the wrong thing and
Hmm.
declaring the wrong thing. And I try my best. And again, it just comes down to the root of helping the person that's in front of me.
Hmm.
Thank you, Victor.
Where do you feel the market will go in the next 6 to 12 months?
Oh man, that really is a loaded question.
That's a little, yeah, yeah.
Yeah, I'd say, I mean, no one really truly knows. And I say that because, 2 years back when rates were, 6.4, 6.5, and that was the norm, the
Mhm.
real estate market was actually doing better than it is today, which has dropped, at least a full 2%.
Right,
So you got cost of borrowing that's cheaper now, but
yeah,
yet consumer sentiment is at an all-time low.
right.
Uh, and it's due to the obvious geopolitical factors
Mhm,
and uncertainty.
mhm.
And I think right now, in my humble opinion, most people are more worried about if they will have a job
Right,
tomorrow, right?
right. Yeah.
I think that in the next 6 to 12 months, if the federal government, can figure out the trade talks or seal a
Mhm,
deal with the U.S. and get a
mhm.
deal going, I think that would at least, at the very least, end the question of this tariff stuff.
Right,
And
right.
therefore, if that happens, then I think the consumer sentiment will be brought up. And I mean, at the end of the day, when consumer sentiment is down,
Hmm.
people still need to buy homes.
Right.
There's always people getting married. There's always people getting divorced,
Hmm.
right? In
Hmm.
either scenario, they need to either downsize or upsize.
Hmm. Hmm. Yeah.
So to answer your question, I think it depends, but I think, currently they are trying to work out something. And eventually think that, in the 6 to 12 months, if things are worked out, I do think that the real estate market would likely, gain some traction, right?
Right.
Given
Yeah.
that interest rate it's not an all-time low, of course, but
Mhm.
hovering around the 4% mark is quite decent.
Right.
Payments are no longer sky high,
Hmm.
right?
Hmm.
Yeah. So that's what I think,
Yeah.
right? I could be wrong, right?
I agree with you. I think a lot of it, like right now, rates are it's more affordable, and prices actually have come down on a lot of products. And so there are actually some really good deals out there. And some places are cheaper than what it was back in 2019, even 2019, 2018. And so I think a lot of the buyers that's been complaining about affordability, it's actually now for selected products, it is actually more affordable than what it was 5, 6 years ago. But they're not jumping in. There's a lot of, I mean, I totally understand the uncertainty. So
Mhm.
it's going to be interesting, but I do agree with you that people will still need to upsize. Like people are getting married, people are having kids, they need more space, they need to upsize. People are retiring, they need to downsize. Like that to me, the last 6 months, it seems like they put it on pause, but the families are getting bigger, so they'll still eventually need to buy. And so it's going to be interesting. Like, do we have a gradual kind of kind of recovery, or do we have one where when some people jump back in and prices starts to go back up, like do a lot more? Like is it going to be a snowball effect or is it going to be more gradual? So we'll see, but we don't know when that's going to occur. So
Yeah, definitely. I mean, I think my opinion is probably more gradual this time.
right, yes,
Um,
yeah,
the 2021 spike was due to, a major event such as
right,
the
right,
pandemic.
yeah,
This time was more so about the whole tariff, like a man-made thing, and
right, right.
the thing here is, they slowed down on immigration a lot, so we don't have a
That's true.
whole lot of new people coming in.
Yep, yeah,
But I think if people realize that they will have a job tomorrow,
mm-hmm,
and the certain prices on certain things such as food and oil and all that stuff is kind of a certain price
mm-hmm,
and some certainty,
right,
then maybe gradually people will go, okay, maybe it is okay and time to continue on my life because I need that upgrade. I have
right,
kids. I
yeah,
can't stay in this one bedroom anymore.
right, right, yeah, yeah.
But who knows?
Who
Right.
knows? I
Yeah.
mean, I think it is interesting that I think back, I remember 2020, 2021, there was a lot of fiscal stimulus. And the central
Yes.
bank was very bold in their action. It was like, we're dropping rates so quickly. We're going to keep it low for a long time. Like the message they're communicating is very different than now,
Yes.
where we're hearing from the Bank of Canada. It's a lot of uncertainty, even with what they want to be doing. They're like, oh, we're just gonna pause. We might be we're gonna there's two more drops or something for this year, but they're pausing. So it's creating they're uncertain themselves. So
Yes.
that I think that's the biggest contrast versus 2020, 2021, where it was we're gonna drop drastically. We're
Yeah.
pumping all this funds in, but right now we're kind of like you say, low immigration, and then it's they the money isn't coming as quickly. So you're
Yes.
right. Very likely will be a gradual kind of recovery instead
Yep.
of a rocket ship back then.
Yeah. Yeah, definitely. So
Yeah.
it'll be interesting to see what happens.
Yeah, yeah, it's always a little different, right? Every cycle, things are always a little different.
Yeah, yeah, for sure.
The age-old question: variable rates versus fixed rates. What's your take?
Var- v- Variable versus fixed. This question I pretty much get on a daily basis, not just from client calls, like even my own family, my friends when I just going out for a drink with them, or I'm having a play date with my kids, and parents are always asking me this question. And I always tell them, especially right now, I'd say do what you can afford. That's number one. So when you look at and let me elaborate on that answer. So variable versus fixed, right? Variable, on one hand, would some people look at it as uncertainty, right? Fixed, some people will look at it as certainty.
Mhm.
Some people may look at variable as an option to save more money
Mhm.
versus a fixed rate is you're fixed in there and there's no option to save money. So it's to answer that question properly, I'd say like look at the payments of a variable and look at the payments of a fixed.
Mhm.
If you choose fixed today, it means that, whatever happens in 2, 3, 4, 5 years after you make that decision, you have to make peace with that rate, right? Likely you want to stick with it because otherwise there would be a penalty that would follow through if you break it and enter into a
Mhm.
new contract, right? Um, Variable, on the other hand, does offer a little bit more flexibility, but it's not for everyone. So, in terms of flexibility, you can move a variable mortgage into a fixed rate at any given time with no penalties, and the big five banks all offer that, right? Most lenders will offer that.
Mhm.
Uh, it's just that at the time of you moving it back to a fixed rate to an equal or greater term, it depends on what the market rate is.
Mhm.
Um, Now, if you were to choose, if you chose a variable rate prior to 2022, summer of 2022, for the last 5 years prior to that, you're probably better off now.
Right.
Now, after 2022, summer of 2022, you would probably likely have paid a lot more money than you should have. So
Mhm.
that's where the gamble is, right? It's about
Right.
timing
Right.
too. I would tell the person that is deciding among these two options to go, okay, would you be able to sleep soundly at night if you picked a variable and suddenly rates were going up and you're paying, let's say, $5,000 more in interest per year, right?
Mhm.
If the answer is going, no, I'm not comfortable with it. I'm just making enough to afford this mortgage and have a little bit of disposable income for vacation and whatnot, then I'd
Mhm.
say go fixed,
Right.
right? Because right now rates have fallen to, 4, 3.99, three point
Mhm.
eight nine, sometimes depending on the term. And
Mhm.
that historically, prior to the pandemic and prior to the 2008 financial crisis,
Mhm.
if a high threes, like 4% rate was like the norm. It
Mhm.
wasn't out of the ordinary.
Right.
So if you did choose a fix, it's actually not bad.
Mhm.
So also with a variable, although it can pose a lot of upside, you'd have to be a person, especially right now in today's rate climate, that you'd have to really pay attention to the news
Right.
because one decision that the government makes or even the U.S. president makes can affect the
Mhm.
rates on our end, right?
Right.
Either up or down,
Right.
right? So I've been telling my clients, going, hey, if you're a person that's like, hey, I just want to pick something and not stare at it for the next 5 years, go fix.
Mm.
You
Mhm.
can't be lazy about this one. But if you're like, hey, I don't mind. I always watch news and I have an interest in finances.
Mhm.
And
Mhm.
I don't mind calling up my banker and whatnot or my mortgage guy to
Mhm.
talk about this once in a while and have a review.
Mhm.
Go for a variable because if you are a little bit risk adverse, but you're willing to stomach a little bit of change, you can still have the option to move it to a fixed rate at any time. Right? Just
Right.
remember that.
Yeah.
So I sorry for the long-winded answer. It's not exactly a clear-cut answer. It's not one of those like A or B and it should be
Mhm.
A, right? It's more like depending on what type of person you are and the risk
Right.
tolerance, that's where you should be at.
Mhm. Mhm.
And I've said this answer so many times already to people in my circle, right?
Yeah.
And
Yeah.
happy to share that, with you.
It's a common. I mean, just on the real estate, the realtor side, we do get asked that quite a bit. Should I be going with variable and fixed? And I'm always, speak with your mortgage broker.
Yeah. No, totally
So
understand. Yeah.
yeah, yeah. It's do you think that I mean, this is a loaded question because it's always really hard to predict.
Yeah.
I mean, I like when Warren Buffett was asked about interest rate, and here's this guy, one of the top 10 richest billionaire in the world, and he goes, he does not want to get into the business of predicting rates because it's so tough. But I'm going to ask you that question. Do you think we're going to be getting a couple more cuts for the next 6 months?
Um, Me looking at the news as of this very moment,
Mhm,
right now, I do believe so.
mhm,
I agree with right now the general consensus on July 30th's next Bank of Canada rate announcement
mhm.
is a rate cut.
Okay.
And there's a few key factors in there. One is inflation, right?
Right.
They seem to have that somewhat under control, although the general inflation rate I think is like 1.75, but the core inflation rate is still slightly above of what they want it to be, but it's still within that neutral range of where the overall target is.
Right.
GDP growth is another thing that they look at.
Mhm.
Not the greatest. And then the last one is unemployment rate month over month has been climbing 0.1% from the
Right.
last I checked.
Right.
So, with these factors, and of course not sure what's happening trade deal, right?
Right. Right.
You know,
Yeah. Yeah.
so all these things that's happening, and it looks like the general consensus is pointing at more negative news. I
Mhm.
do think as of right now that there would be a cut, but there is one more inflation report that will come out prior to Bank of Canada's decision, and that's a very key factor of them making
Mhm.
that decision.
Right.
And prior when I was reading reports and articles, you know, like Tiff Macklem or Bank of Canada governor like
Mhm.
made a decision literally like hours prior to the announcement.
Right.
You know,
Right. Yeah.
so to answer your question, just like how Warren Buffett says, it's hard to predict, right?
Yeah.
Because I
Yeah.
don't know what's going through their head. We can
Mhm.
only guess,
Mhm.
and the general financial analysts will be using these common, you know, markers to predict if they're going to do it or not. But
Right.
as of this moment, I do think so. I think we need a little bit of help.
Right.
Um,
Right.
and I can tell you right now, like for example, the construction industry is taking a big hit right now,
Mm. Mhm. Mhm.
and a lot of the CEOs of development companies are asking if they can lift the foreign buyers ban
Right. Yes.
to help, right?
Yeah. Yeah. Heard
You
about
know,
that. Yeah.
Yeah, and they're laying off a lot of the people there. I've heard
Mhm.
from my friends in the industry, real estate groups within banks, the big banks, are
Mhm.
also letting certain people go.
Right.
Unfortunately,
Right.
right?
Yeah.
So that's a signal that it's a trickle down effect, right?
Mhm. Mhm.
So hopefully, I'm hoping that they'll keep lowering the rates.
Yeah. Yeah.
Yeah,
Definitely. Definitely will help. Will help.
yeah,
Yeah, because the 2 pauses so far, I think, is giving the market mixed signals. If
yes,
they start cutting, I think that will improve the buyer's confidence because it is uncertain time. They need something to work towards too. Like, if they
yes,
see rates coming down, then it's a more of a reassurance that, "Okay, we're on the right path," that, it might be time to to make the move instead of just waiting.
yes,
Yeah,
definitely.
yeah. Um So, uh, can you this I hear quite a bit. People are talking about pre-qualifications and pre-approval. Can you break down the difference between pre-qualification and pre-approval, or if there's any difference?
Very, very good question, Victor. Yes, I get this a lot. I get a lot of calls, warm leads, mostly warm leads, and the first maybe the first five questions they'll ask is, "Hey Ben, can you get me a pre-approved?" And my question to them is, "Okay, I can get you a pre-approval, but do you know what the difference between a pre-approval and say a pre-qualification is?" And the always standard answer is no, right?
Mm,
So pre-approval is when for example, a client comes to me and they go, "I make $80,000 a year. Do you think I can get $400,000?" Right? If they haven't given me a single shred of document, I can still send that deal in to the bank because all they need is the key elements of a signed signature for a consent form so that we can pull a credit, right?
mhm,
Um, verbally, the client telling me they make $80,000,
mhm,
X amount for down payment. So through
right.
the three elements, I can then send it in for pre-approval. So
Mm,
what the bank does is they don't look at any of the documents because I don't even have any of the documents yet at this point.
mm,
Um, and they go, okay, based on the credit is good. based on the income you stated is good, and based on the down payment, we can give you X amount of mortgage. Here's your pre-approval letter. We've saved you a rate. Off you go shopping, right?
Hmm.
And then the realtor that's helping the client, they base it on these, they see that piece of paper because they don't want to be, harshly speaking, wasting their time. They go, okay, my
Right.
client's, but they don't know that, the mortgage professional or the bank even may not have seen any paperwork at all. It's just all based on word, right?
Right. Right. Yeah.
And then what happens is, in a number of my deals that come in is, oh no, we're closing, but subjects are removed, and the bank declined his deal after
Right.
looking at the documents. And then I have to start from beginning and trying to save the deal
Hmm.
because they got a pre-approval, and a lot of clients take that as like a bulletproof vest going into a gunfight. And I
Yeah.
tell them, just be very careful. Okay,
Yeah.
that's basically in a nutshell pre-approval. It's not all bad. Don't get me wrong, right?
Hmm.
It's just that because they're so relaxed on giving out pre-approvals. Uh,
Hmm.
in my opinion, pre-approval should always follow through with paperwork reviewed, right?
Right. Right.
So a pre-qualification is when your mortgage professional or mortgage specialist or banker
Hmm.
looks through all the documents and actually scrutinizes it like an underwriter does, right?
Right.
For example, a nurse, you know, nurse tells you they make $80,000 a year.
Hmm.
Well, is it hourly, right? Are they guaranteed? Are they
Hmm.
a casual nurse? Did they work there for 2 years, right? Like all these elements come into play, right? So your
Right.
mortgage professional, whoever it is, should be looking, okay, if they've been in the job for over 2 years, then we can use an average. If they
Hmm.
haven't and they just started because a nurse is so much needed, then Vancouver Coastal Health might have hired you as a regular full time, and they'll guarantee you the hours, right?
Hmm.
Therefore, the word key guarantee can make a huge change in the mortgage application process. So a
Right.
qualification is like looking through your down payment. Also, that's
Hmm.
another surprise. So when it comes to closing, let's say your income's all good, but then there's a wire transfer internationally from another country. Well, some
Mm.
banks want to know, where is this from? Which
Mm.
country is it from? Is it from a sanctioned country? Right? Like,
Right.
and
Right.
then if it is, okay, we want to know more. We definitely want to know more,
Right.
right? So that's where a pre-qualification is very important, right?
Hmm.
I mean, in a perfect world, a pre-qualification and pre-approval can also be the same thing, where the mortgage professional looks through all these documents and
Right.
then sends it to the bank, gets the client a rate hold, and
Hmm.
that would be the perfect scenario, right?
Right.
Unfortunately, in the real world, a lot of people in my industry, I don't want to say they're lazy or anything, they just do it.
Hmm.
And I mean, in some sense, I'm blessed with that because I come in kind of looking like the hero when I see a pre-approval gone wrong, and I come in and I re-educate the client, and they're happy now dealing with me, and I try to save the deal and I gain a
Hmm.
deal, right?
Right.
So
Right.
that's where the difference really comes in.
Yeah.
Yeah.
That's good to know. Next time, so what I tend to do a lot of times whenever I present to seller, I get an offer. I ask the buyer, "Is your buyer pre-approved?" I got to
Yeah.
change that language to, "Are your buyers pre-qualified?"
Yeah, I mean, you could. Yeah. But
Yeah,
generally they'll get the message,
they'll
right?
say yes still, and then the deal might still go sideways.
Yes, and hopefully not for you, right?
Yeah,
Yeah.
good, good. Uh, so for someone that's thinking early, we talk about upsizing because the bulk of the market, of course, I find typically 70% is from people trading homes, and a lot of it's upsizing. So, for someone thinking about upsizing, how should they prepare to get the best mortgage possible?
So when you're upsizing, so the term, best mortgage possible, in my opinion, is not always the best rate. It's the
Mm,
mortgage that fits the person under their circumstances.
right. Hmm.
So we have mortgages of all type. We call them A lenders, which is banks. B
Hmm.
lenders, which if you have credit problems or income problem, they would then tend to be a little bit easier going and lend to you based on the B side. And the final option, if those two options are not available, there is private financing, which is they purely look at the equity of the home, right?
Hmm.
So we tend to always try to avoid the private side. There's
Hmm.
no shame in really in any of them. It's just that it just costs more, right? And
Right.
everyone we try to put them in the A lenders first. Now, unfortunately for A lenders and big banks, they look for the most stuff, right? They
Hmm.
want everything. They want the cream of the crop, right? You want
Mhm.
good credit, you want good income, you want a good source of down payment to fulfill their, AML purposes, right? And
Mhm.
they can look up to 90 days of history to make sure it's
Mhm.
clean. So if you are looking to upsize, what I would do is, as an employee,
Mhm.
you can't really change your income. Your job is your job. You might get a raise, you might get a promotion, right? Try as an employee, try not to kind of move around too much.
Mhm.
If you're in the tech sector and you see a job opportunity, as long as you're in the same field, no problem, go for it, right? If
Mhm.
you're on a probationary basis, some banks will not like that,
Mhm.
right? However, if you've been to Microsoft, say for example, if you've been to Microsoft and you've been working there for 10 years and Apple gave you a good offer and you
Mhm.
move there, 99% of the time you can get an exception, right? Under those circumstances, right?
Mhm.
But if you were an IT guy and you decide to quit and become a nurse, then likely you would have an issue getting
Mhm.
qualified, right?
Mhm.
So as an employee, I would say stay in your job, or go for a promotion or move up within your field. Minimize debt. So if you're looking to buy that nice fancy car, hold off on the finance or the lease.
Mhm.
If you're looking to upgrade your education and need a student loan, maybe hold off on that
Mhm.
until your purchase is finalized. Try to pay off your credit card bills on a monthly basis. If you're self-employed, different ballgame. So self-employed individuals, pretty much unanimously among all banks,
Mhm.
uh, they'll look at a 2-year average personal income. So for a self-employed individual, if you've been around doing your business for a long, long time and you're set up as a corporation, uh, do you know that try to report a bit more income? That's number one,
Right.
right? If you're paying yourself only $30,000 a year, then you're not going to get a really big mortgage, unfortunately. Um, if you're self-employed, you can actually report a higher net income in a corporation, which in BC is taxable at around, I think, 11 or 11.5%
Mhm.
tax, up to $500,000, right?
Mhm.
And most banks will accept a great majority of that income. They'll take a 2-year
Mhm.
average of your net business income,
Mhm.
and a large portion of that they can be used towards your mortgage application. So
Right.
therefore, technically speaking, you could be at a $30,000 personal income, but a $500,000 business income,
Right.
and still qualify for a million or $2 million mortgage possibly,
Mhm.
right? And,
Mhm.
and the same thing though, try to not buy that car, try
Mhm.
not to take on any additional debt until this is over, right?
Sounds good.
Yeah.
I remember back then there was the Bitcoin. I was just joking to a couple of my clients, don't put in the Bitcoin. You don't want that down payment disappearing before closing. But I guess for a while it was just going up. It might have worked out in their favor.
Yes. Yes. Yeah. I'm looking at Bitcoin prices today. Holy.
Yeah, yeah. Good old days when it was in a sense. I knew a guy who was talking about it when it was just a couple dollars. Should have bought, but hard to say. No one predicted.
Yes. Yes. That's more
Yeah,
like a lottery situation there, right? If
yeah,
only you knew, right?
yeah. Um, so, what keeps you passionate about real estate and helping people with financing?
That's a good question too.
Yeah.
Well, I think for me, growing up in banking and in sales, naturally I developed a passion of with helping people and talking to people.
Hmm.
One of my mentors once taught me, like, don't look at them as deals or numbers or anything. Just look at it as how many people you can help.
Right.
Person in front of you, just help them. You do a good job, there'll be a next person and the
Hmm.
next. And before you know it, your network grows. And that holds true today.
Hmm.
So if there is a scenario where I get to make more money, but it's less beneficial to my client, I will not do that,
Hmm.
right? But I will try to have a situation where I can maximize, the client's benefit. And if it serves my purpose, great. But
Hmm.
sometimes, we have to do a few things where we don't make anything at all, but at
Hmm.
least we help the person, and maybe, just maybe, their family would need my services, right?
Hmm. Hmm.
And that actually has proven a few times, actually mostly, to work. Uh,
Hmm. Hmm.
and also, real estate is one of our largest. industry in BC, and BC is my home.
Mhm.
You know, and also like I do really like my job. It's very
Mhm.
flexible. Um, sometimes I think like which other job allows me to sit in front of a computer to do a bit of work and then
Mhm.
go use my home gym, you
Nice.
know,
Yeah.
and come back to it.
Yeah.
And I still get to feed my family and have time to spend with my kids,
Mhm.
right?
Mhm.
Unfortunately, a 9 to 5 job won't allow that. So I guess all these factors coming in
Mhm.
really drives my passion, and I'd say mostly the freedom, right?
Mm. Mhm.
Like if you ask me, Victor, like could you go work for a corporation again? I'd say probably not.
Yeah. Yeah.
Uh, like having to be at a place at 9 and ending a shift at 5 or even later most days,
Mhm.
you know, and you're building out someone else's dream. Now, mind you, it's not a bad thing. Some people love it, right? And I
Mhm.
get that,
Mhm.
right? It's just
Yeah.
not for me,
Yeah.
right?
Yeah.
And I know we talked about uncertainties earlier in our conversation, and I guess I'm a type of guy that I've learned to live with uncertainty
Mhm.
through my
Mhm.
jobs, and I'm
Mhm.
comfortable with it.
Yeah.
So so now that I'm comfortable with it, it's like purely just trying to help people, and it just goes in my job. So that's all of this stuff is what drives my passion,
Mhm.
right? Yeah.
Awesome. I mean, I see it. Like there's been a couple cases with my clients that you work with, where you looked at their file and you tell them, hey, maybe it's better if you go with a different provider or go straight to that bank. So I mean, I
Yes.
really appreciate like you're looking on the behalf of the client's interests first. So that's what's always really impressed me. Because you look at their file and you're like, okay, maybe this is not the best. I mean, most of the time you're able to help them out, but there's selected cases where it doesn't make sense, and you take the right path, you take the moral high ground, and go, okay, there's a better provider out there. So that's pretty amazing. I heard from this realtor when I first got into the business, and she said basically take care of your clients and your clients will take care of you. And
Yes.
yeah, and I like the way you operate your business because you're really focused on delivering that value. You're thinking about the clients first instead of thinking of yourself, which is amazing. Which is
No, no, thank you.
yeah.
Yeah, because I mean, I've met a lot of guys in this industry,
Hmm.
and then some of them are just money, 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 money.
Yeah.
And yes, money is important because it feeds our family and buys us
Hmm.
food. But I say that it isn't everything,
Hmm. Hmm. Hmm.
if you can get over that and you think about like, if this person, if I did something bad in
Hmm.
my own best interest and they find out later, you
Hmm.
know, I think it's like an old saying, if you have a negative experience, you'll tell like 10 friends. And
Right. Right.
I get that,
Right.
right?
Yeah. Yeah.
If you have a positive experience, you might tell a few friends, like, "Oh,
Hmm.
Victor, good guy, right?
Hmm.
That's
Hmm.
my best interest. He's not pushy. He's really looking out for the right property for me, right?" But
Hmm.
if let's say Ben did a bad job, oh, he gave me private financing and charged all, and the fees were all sky high when it was a triple A client. You're
Hmm.
probably not going to hear the end of it.
Right. Right. Yeah.
Yeah.
Yeah. Yeah, but the fees are high these days for I think bridge loans and private lending. It's just the way it is right now these days. It is high. It is high.
It is a high in general. I mean, you bring up bridge loans. Bridge loans, by definition, is
Hmm.
if you have a firm sales and a firm purchase, and
Hmm.
your purchase happens before your sale.
Yeah.
Um, I always try to tell a client, if possible, have your purchase happen after your sale. That way, you don't need a bridge because in either
Hmm.
scenario, you deal a bridge with a bank or a private financer. It's just expensive. Like
Right.
banks charge prime plus three, four, five,
Hmm.
for a bridge loan.
Hmm.
Uh,
Hmm.
which is a lot more than your traditional mortgage, which would be if you did a variable today, it'd be prime minus, right?
Hmm. Hmm.
Private loans, which offer flexibility but higher fees. It is a
Hmm.
solution for someone that's kind of cornered, to be honest with you.
Right. Yeah.
But unless you really, if you have a choice, I wouldn't recommend private financing for anyone. right?
Mm.
Um,
Mhm. Mhm.
I mean, I did have one client who really, really rare case scenario in my career
Mhm.
that just was honestly just too lazy to supply anything. He just didn't
Right.
want to do any income or anything. He's like, oh, just give me private financing. And I go, hey, like, could you at least just give me a shred of documents of income?
Mhm.
Maybe there's a better way. Because,
Right.
and I think at one point he almost got annoyed of me
Right.
and go,
Right.
and basically gave me an ultimatum like, hey, if you're not going to do it, I'm just going to find someone else, you know?
Right. Right.
Which is very odd. Yeah, I got it done for him, right?
Yeah.
But my first take is always the cheaper route, right?
Mm. Mhm. Yeah. Good, good, good. So, let's say someone watching this podcast wants to reach out or learn more. What's the best way to connect with you?
I think the best way just give me a call first.
Mhm.
I know nowadays the younger generation or Gen Z
Mhm.
typically just likes to text
Right.
or WhatsApp
Mhm.
or even email, or you use emojis. I'm not sure. Um, I'm a little bit more old school. If you don't mind, don't be a stranger.
Mhm.
Just give me a call, right?
Mhm. Yeah.
And even the clients that email me first, I always go, hey, can we start off with a phone conversation just so I can get a quick, 15-minute
Mhm.
snapshot of your financial picture first,
Mhm. Mhm.
and then we can go from there, right?
Mhm.
Because a lot can be done through talking rather than email or WhatsApp. Sometimes the message isn't clear, also,
Right. Yeah.
right?
Yeah. Yeah.
So yeah, I think a simple call would be good. And then if you want to continue, either with
Mhm.
WhatsApp or text or email,
Mhm.
happy to do that, or even another call.
Excellent. So what we'll do is we'll put your contact information in the show notes for this podcast so that
Sure.
the people viewing it could reach out directly to you.
Thank you, Victor. Appreciate that.
Good, good. So thank you, Ben. Thank you for coming on this podcast. This is actually podcast number 1. So looking forward to do many, many more of this. And thank you for joining us.
Thank you so much for inviting me, Victor. Anytime. And if you want me to come back, or if I'm welcome to come back, I'm happy to do so and answer any other additional questions.
You're definitely welcome back. So thank you, Ben.
Okay. Awesome. Thanks, Victor.